What's up, PokeGeeks? PokeGeek back with another video. This one I hope to be in a long line of videos that I'm dubbing kind of a fundamental or foundational kind of videos that'll give you the foundation of how to learn to identify good and bad investments when it comes to collectibles and things like that. This video is going to be all about Warren Buffett, one of the richest men on earth, and his 7 principles that he discusses in different conferences and in his books that he applies to successful investing. And we're gonna take those 7 principles and see how we can apply those to the different collectible markets, but mostly for our case, for Pokemon. So we're eventually gonna get into that. Like always, don't forget to like and subscribe, hit that bell, make sure that you're getting my videos as soon as they come out, so that way you're always hit with the freshest content that I'm doling out for you guys. And like I said, I really hope that this becomes part of a series that's going to go all over the different fundamentals and different basic learning tools that I hope to give you guys that you can then use to identify great investments on your own. You won't need to go out there and just find some YouTuber who's going to tell you what to buy and what to sell and what's going up, what's going down. I'm not here to be your stonks manager. Really what I want to do is give you all the tools that you need in order to make those great investment choices on your own. So that way you can always learn from that, grow from that, become a better investor as time goes on. Now, first of all, some of you may be asking, who is Warren Buffett? Well, Warren Buffett is one of the richest men on earth. He was the CEO of Berkshire Hathaway, one of the largest investment firms in America. And essentially, because of his kind of notoriety of being a very good investor that came back with a lot of good returns, you know, for his firm, but also for himself. And so he often spoke on the topic, not only at different conferences that Berkshire Hathaway would have, but also ones that he would have individually. We're mostly going to be going over just one of his sets of rules that he's laid out, and those are called Warren Buffett's 7 Principles of Investing. Then what we'll do is we'll take all 7 of those principles, we'll go through them one by one and see how we can apply those to Pokemon. But really what you could do is take out the word Pokemon and insert your favorite collectible or alternate and why can't I not fucking talk? Or alternative investment. So let's go ahead and get into those 7 principles as Warren Buffett lays them out. I should also go ahead and start, first of all, with the disclaimer that I'm sure all of you have started to get familiar with, which is that I am not a financial advisor. I am not a professional in any way. Everything you see in this video are just my personal opinions, and really a lot of the time you're just going to see me doing analysis based on factual information, not something that I can really draw opinions from. That's just the nature of what this channel will be. I'm trying to give you guys facts and tools and not just subjective opinions that you could really get anywhere. Everything that you do as far as, you know, spending your money, investing is part of the decisions you make, and you should always be a smart investor. Do your research. Don't depend on other people to make decisions for you. With that being said, all right, so as Warren Buffett lays them out, let's go through them 1 through 7, all 7 of his principles. And like I said, afterwards, we'll go through each of them and see how we can apply those to Pokemon. Principle number 1, invest with discipline. Principle number 2, buy what you know. Principle number 3, don't buy into the market's emotionality. Principle number 4, when opportunity knocks, open the door. Principle number 5, invest for the long term. Principle number 6, index funds are an investor's friend. And finally, principle number 7, don't be afraid to sell losing stocks. Now, each of Buffett's 7 principles come with different characteristics, and we'll go through each of those and see how those apply to Pokemon. So, starting with the first one, and if you see me looking down at my notes, I apologize, but I've got a lot of notes on this subject, so I'll try and keep my eyes on you as much as I can. So, principle number one is invest with discipline. Now, what does Buffett mean by that? There are some different factors of sound investments. Does this investment have favorable long-term characteristics? Will Pokemon be around in 20 years? How likely is it that Pokemon is around 20, 30, 40 years from now? Now, if you ask me, I think Pokemon is being one of the largest franchises on the entire planet is probably pretty secure in the fact that it's still going to be around for a really long time. I think that just already tells us that this collectible market, when it comes to Pokemon trading cards or really just Pokemon anything for that matter, is that it's still a product that people are going to know many years from now. All in all, I think it's likely that Pokemon is an investment that has good long-term characteristics. Competent and honest management. Now, when Warren Buffett talks about this, he's talking about is the management of that particular business that the stock is for competent in the way that they manage their business. Now, that can differ for a lot of companies, but for us, when we're talking about Pokemon as a collectible or the trading card game in general, we're just talking about one company because only one company makes the cards, the Pokemon Company. So with that being said, do we believe that the Pokemon Company is going to continue to manage their brand in a competent way? And I think if you look over the last 25 years that the cards have existed, and, the games and everything, how they've managed their brand and have grown and grown over the years shows that the management of this company really cares about their brand, especially with who they associate with socially, what brands they, partner with. They're very careful about what they do when it comes to their brand. Do we believe that the Pokemon Company will continue to manage their brand in a competent way? And I think that definitively we can pretty much say yes. Obviously, anything can happen. We don't have crystal balls and we can't see the future. But for 25 years, Pokemon has managed their brand and their company in a way that has protected it and kept it long lasting throughout these years. So looking at that history, I don't think that we should have any reason to think that suddenly some sort of mismanagement would come into play that causes Pokemon to fail as a brand. Is the purchase price attractive when measured against the yardstick of value to a private owner? Now, what does Buffett mean by this? Well, trying to apply that to Pokemon as well, essentially it means to a private owner, how much would they be willing to pay? Not just, someone who's speculating on this card, but essentially an end consumer, someone who wants to own this particular card or this particular set or whatever they may be buying from you. Are they that person? What do they value that particular item at? That's very important when it comes to trying to draw conclusions about the actual underlying and intrinsic value of an item. This begs the question, is the price below what a private owner would pay for an item or what they value an item at? And so when you're viewing the price of an item or what it's currently being valued at by the market, is that value reasonable for what you think a private owner would pay to have that item? Now, if it's below that, obviously that seems like a good time to buy that particular item. But if it's way above that, it may be that there's lots of speculation on that item and people are assuming or buying that item up, thinking that it's going to continue up. But if there's no end consumers that are really going to want to buy that item at that value, they'll eventually tumble down as speculation decreases over time as its value goes up and up. The next point, an industry with which you feel familiar and whose long-term business characteristics you feel competent to judge. Now, applying that to Pokemon, that can mean, do you know the history of this particular item? Do you feel competent to judge why its price is moving? Now, when we talk about doing research on particular items and being competent about what you're buying or selling, it's very important to know the history of an item, how scarce it may be or how rare it may be. Also, it may be important just to know the history of how the item is obtained. There are plenty of Japanese promo cards that are out there that were very limited prints because they were only for particular events or only for particular card shops that did things, or it may have been a tournament where somebody had to place in a certain place to get that card and there were only so many of them made. We've even seen cards that actually have the likeness of actual people on them. There are definitely many reasons to try and understand the history of a card in order to try and draw conclusions about its rarity, scarcity, or how, the market may value that item. Now, with doing research on those items, you then feel that you're more competent to judge why the price moves on particular items. Now, I'm not going to say that you're always going to know, because just like any market, they can be very irrational. And as Warren Buffett says, the market can be irrational a lot longer than you can stay solvent. But having that knowledge about the history of an item, having any kind of knowledge, just as much as you can about something that you're buying or selling, is only going to help you in that fact of being able to make those competent judgments about why prices are going to move, or maybe even to try and preempt if a price movement is going to happen. I know that first point was a little long, but let's go ahead and get into the second one, which is buy what you know. Now, how we can apply the idea of buy what you know to Pokemon is that you should always concentrate on sets or different cards that you are either already familiar with through your own personal history with the trading card game or whatever you may have collected in the past, or you've done sufficient research on. Now, research doesn't mean that you watch some YouTube videos and somebody said, hey, this card is really hot right now, you should buy it. Research means, doing a lot of different things, and people have their different ways of doing research. But just to give you a few clues of where you should start, you should always be looking at Bulbapedia is a good place to start to find out the history of a card, where it comes from, maybe different versions of that card that may be in existence, what sets they come from. And when it comes to promos, honestly, it can help a lot with finding out how that card was printed or what event that card may have come from. There are many different places that you can go to track prices, or you can just go to eBay sold listings and look through those. But ultimately, it's up to you to make sure that you do sufficient research, that you know that you completely understand a card, its history, and that you understand why it's being valued in the way it is right now. And another point that Buffett makes is never invest in a business you don't understand. That should be pretty much straightforward. You shouldn't be investing in cards or investing in sets that you really don't understand. If you've done no research on that item, you have no idea about the history of its price, about how it's been valued by the market over time, you've got nothing to rely on when it comes to when its price moves in the future. When its price moves in the future, it's all going to be relative to the price that you currently bought it at, and you won't have anything previously to go on. Needless to say, all of point number 2 is pretty much about do your research. Principle number 3, don't buy into the market's emotionality. The way Warren Buffett describes it is the market is a manic depressive. What he means by that is that it changes its mood very, very often and without predictability. And that's something that you have to be prepared for when it comes to any investment market. We can all do our research. We can all work hard, tirelessly for long periods of time, doing everything we can, and still end up wrong at the end of the day. Whether or not everything we drew up, everything that we planned for, said that we were right. At the end of the day, markets are completely irrational. and markets can turn without warning. So one of the best parts of it is don't follow along with that emotionality of the market. Often people panic, and that's really the worst time to buy and sell. When it comes to buying, that's usually in the form of FOMO, or fear of missing out. People feel like they're going to miss out on this item, so they talk themselves into buying something at way higher of a price than they know they should. Or there's also the opposite, which is panic selling. Fear that this item is just going to continue to drop in value, and to be so scared as to sell off something that really they know is being undervalued at the current time. Now, a big part of this is avoiding the hype trains. We all know them. Everybody, will see it happen online, whether it's some YouTuber highlights a card or a certain card, and then suddenly that becomes the new hype train that everybody wants to buy. Or you also have people who do the very opposite, which is completely block out a particular set or a particular kind of cards without sound reasoning. Really, it's just a subjective reason that they don't particularly like something about the card, or maybe they just don't have any personal attachment to it. But they shouldn't let that get in the way of doing good research and analyzing when something is a good buy or a bad buy, or a good sell or a bad sell. Really, a lot of what principle number 3 is trying to get across to us is that we should take emotion out of the process. When it comes to investing, we should be like robots or like computers and make calculated decisions based on trade principles that we've already set in place, like these 7 principles that I'm going through right now with you guys. Principle number 4, when opportunity knocks, open the door. Now, what he means by this, saying that opportunity knocks, open the door, is that you should always have the cash or liquid assets in order to jump on when a prime opportunity presents itself. We never know when that amazing opportunity is going to present itself. We could go out tomorrow, go to work just like we always do, and we just happen to run into somebody who's got a first edition base set, and they're willing to part with it for way under market value. Now, if you don't have the money or the cash on hand as a business or as an investor in order to take that opportunity whenever it knocks on your door, then you're really missing out on what could be something that really changes, your business or your investment portfolio. The other point he makes is to have the cash on hand to execute on your confidence. Make sure that you are analyzing and, of course, doing your research. But when that opportunity knocks, you should have the cash on hand or the liquid assets in order to jump on that opportunity and take advantage of it. Always be sure to follow through with trades that you've analyzed and identified as great buys with confidence. Principle number 5, invest for the long term. Now, not everything that we're going to be doing on this channel is about ultimately long-term investments, but I still think the points that he's trying to make here can apply even if you're doing flipping or, short-term to medium-term investments, and not necessarily something that you're looking to hold for a really long-term, like 10 plus 20 years. Everything you buy should have sound long-term prospects. Even if prices dip, you can still have the confidence to hold your investment. Now again, this comes back to doing your research and being confident in knowing the history of how this particular item is valued. If you look at your investments as long-term investments, or that even if the price dips in this particular market and your item becomes less valued than when you got it, you should still have that confidence that your analysis was correct and that you should hold this particular item until it becomes profitable again. Ultimately, this comes back to do your research, because the more you do your research, the easier all these other principles become, because they're all based on having knowledge about what you're investing in. This is point number 6, and honestly, one that I've had kind of trouble deciding how it should be applied to Pokemon, but let's talk about it anyway. It's index funds are an investor's friend. Now, the way I've looked at this point is that buying random lots, like meaning you buy a large lot of cards that somebody's willing to give away for under market value just because they, or somebody who doesn't collect anymore, or they just heard that suddenly these cards are worth money and they sell them off either on Facebook Marketplace or Craigslist, or even sometimes you might see it pop up on eBay. But they give, essentially this big collection of cards for under market value just to get that money quickly. And what you can do, and this comes back to point number 4, when opportunity knocks, open the door. If you have the cash on hand and you can jump on that opportunity, that large fund or that large conglomerate of different investments can become one huge profitable investment just by investing in there. With index funds, as the entire market goes up or the entire market does well, because index funds are made up of other smaller companies that all contribute to the value of that particular index fund and its stock, it does as well or as bad as the market is currently doing for those particular businesses. Now, if all of Pokemon is doing well and you invest a probably hefty sum, but under market value for a large sum of cards or investments, you can really take advantage of that situation and turn that into big time profits. The final principle, principle number 7, don't be afraid to sell losing stocks. Now, this is a very important point, and one that is kind of the antithesis of a few of the other points that are previous, but it's very important to remember and to keep in mind. This is something that's really hard for people to do, even in real life, not just with investments, but admit when you're wrong or conditions have changed and reassess your evaluations. The fact of the matter is that, like I've said, markets are very irrational, and sometimes the sentiment for a market can change without notice, and you have to reassess your evaluation of your investments. Not always is everything going to be the same. No investment, whether it's stocks or collectibles, goes up in a straight line slowly but surely over time. They go up, they go down. Sometimes they go up a lot, sometimes they go down a lot. You have to have confidence in your evaluations, but you also have to have an open mind and realize that sometimes your evaluations might be wrong, and you have to take that into account and reassess. Now, I'm glad to have made this video for you guys, showing off what I think will be a foundational piece and a great tool for you guys to come back to at any time whenever you're evaluating whether or not something you want to invest in is a good or bad investment. I'm hoping to keep making more foundational videos like this that'll give you plenty of value in the form of tools and being able to learn to make assessments of investments for yourself. Using these guidelines or these principles outlined by Warren Buffett can only help to serve you when it comes to making investment choices, whether it's stocks or it's Pokemon cards. Always remember to evaluate your buys and sells through this lens, and you'll undoubtedly see more success over time. I want to thank all of you guys for tuning in. Anybody who watched the whole video, thank you very much, guys. I really hope to bring you a more great content. Don't forget to like and subscribe, hit the bell so that way you get notified when they come out. Don't forget to check out some of these other videos over here, and until next time, stay geeky.